Good morning, SMF MMTs. It is a wonderful day. And today's date, how it got here so quick, I don't know. But it's 110 of 2011. And we're in pre-market, and the market's going to open up in 16 minutes. And I have a daily Dow chart here, and I also got the high list. LDK is a solar stock out of China. Obviously had some news on it this morning. Okay, and they see guidance up at the higher end. Some of the ones that we cover, like the Netflix and the Amazon, that's on that new high list on the opening gap. And what will the MMCs be looking for is in the first 5-day trading days, 3 out of 5, there will slide that bid to that bottom. Once the public tape, the public emotion ran their course, it was all about walk that dog and going up in your market maker platform, because that's what your platform is about. So on the positive gaps and the new highs, you're always looking at where that momentum, price action momentum, is going to be in your brain here. And if it's throttling at the highs and not breaking below 85, well, until it does in the IR and the bid and ask ratio is elevated, you don't want to start shorting them until that elevation starts to descend in valuation in your market maker platform. That's this here. So basically, I'm going to talk about the Dow. This is the new high list. You can get some ideas. You can see them now. STP is on there. Another thing we're going to be looking at today is going to be watching how the gap here on an FCX. The last major highs were 122.50. They seem to want to be buying it right above the 115 handle. What we would be looking for is what the dollar is doing and all of these things like that. So basically what we would be looking for, what's related to that commodity area. AU is a gold stock, so we're seeing some things want to go there. We are kicking off the earnings season. We'll be doing specials on that. And that's where we're going to take advantage of the low end. So when a stock closes, give you an example, MMT, stock closes at 40.50 and I give a limit order at 35.50. Within milliseconds, it hits that price, and after hours, and it's a good earnings report, you're making lots of money. So I'm seeing Caterpillar, Diamond Offshore. I can see a gold stock, AUY. I can see various different things revving up. We had a gap down. The Dow futures are down 31. The S&P is down 5. So the weakness on the gap, on those new highs, you're going to look at where they fell at the top, because that positive ratio is to be shorted back down. Then it would set up with the new 3-minute buy action bar. You would move in immediately MMTs and get net long once that short came down, providing that you remain at certain levels within your MMT platform. And you already know what those are. So this is a good day. The public tape is going to be running at full emotion, full steam. So what? Your MMT platform will guide you through it, deciphers those emotions. CLF is another one, Cleveland Cliffs. You got Costco that just ended up on the tape as a retailer. You got you got some of these solars, and you got a couple. The more that I see that they come in, the more higher highs. There, we just got FCX that came on the tape at 117.90. So you got FCX, Amazon, you've got Netflix. Remember the pullback. Remember that during last week, sliding that bid, sliding half of that bar. That means when you're down at the bottom and you trade a 369, but you only go from 0 to, let's say, 25, in your IR, well, you're going to be selling up there because you ain't going no further, and you can be looking at net short then, MMT. So basically, MMT, the key to about shorting the highs for that 369 pullback is they pull back, then they stop, you come out, and you want to go long, because that's where the market maker has taken them down. We got some of the financials in here, HIG, LDK, you got General Motors, so you got all kinds of things that are just now popping in here for the first time. So basically, let's take a look at everything that you do, and that the brain, when you pull back in the name, that diminishing pullback in the IR and bid and ask ratio is diminished. That means it comes back, and but not near the levels that it was doing the last 3 days on slide to bid of 5 days. We want to see where people want to own it. Look, we're starting off Alcoa earnings. Everybody thinks they're going to be good. No one said that they weren't going to be good. But you got to remember that the markets are overbought. Let's not forget that, MMTs. And the fear levels are very complacent. Let's not forget that. And you can run these complacency levels for an extended period of time. It could be 2 weeks, it could be a month, but somewhere it could be that we are going to have a nice pullback when that time comes. And that means when that comes, whether that's today, tomorrow, next week, it will come. They always do. So therefore, the Dow has got a reversal down to this delta line. A half delta movement in the Dow is 34.64. Each one of these lines in the Dow Jones Industrial. So a half delta move is 34.64. On the daily chart, you came down to that delta range of 11,625 in your brain, and man, you popped. And did you ever? So after the opening bell, we're going to take a look at this particular delta, which is this half bar on the Dow, and I'll be doing the rest of the indexes throughout the day for you MMTs. And these half bar pullbacks, that wick equaled half of that big Dow daily big breakout. Remember, a half delta on a daily chart is 34.64 today. And sometimes they're higher on a half delta movement on the daily. And we came in on that wick, which was half of that bar, and they came chugging right along. Technically, the weakness is building in right up at the top because it's technically slide to bid, half bar. No matter how you want to look at it, 11.697 is half the bar up there. A failure close below it or resistance and a rollover, that means the Dow and Dow stocks will be weak and other indexes will follow as well. It is 6:21 a.m. Welcome to the Kickoff January 2011 earnings season you're going to go in. The first week is a very light week. The second week is heavy. And the bellwethers are coming out. And there's lots of price action. Wonderful things and prices to get in the options market. So not that day. Don't get in front of the option on a lot of these things in front of it. But it's the day after where you can steal the premium, where the market makers are taking premium out. You can be there to buy it. Remember, your understanding of what they do, because that's what this platform is also your price glory. You will make a low today in the names we cover. And there will be lots of 369s. Watch for 2 teenies up, 2 teenies down. Out of the 3 teeny high and 3 teeny down is a teeny and a half in the middle. A consolidation is 2 teenies up and down during consolidations in your market maker platform. But when the great directional movements down or up are going to be is that if I go up 3 teenies, if I don't break it and I start to slide to bid, you know to get net short. Doesn't matter. This is the Dow reversal on a daily. They came back in here, MMTs. That body closed right back up above that delta, half delta line. It's a half delta line at 34.64 for today. And guess what? Let's go in here. And let's take a look at the upper end of the market here. So a half delta on this is going to be 63, 63, 63. Let me update it. There's 20. Here it is. So we're seeing something different then. Okay, so that's the Dow. Let's get down here. 1167. That's the Dow. 11,674. All right, we closed at 11,674. If we go up a half delta, that's going to put the Dow at 11,730. If we go up one full delta, then you're at 11,800 on the Dow. That's a half and a full. As far as the pricing on the daily. It doesn't do the other ones. It only does the half delta movements up and down. That's it. On the daily, right here. MMT. Remember, we're going to get ready to rumble. Price action, long and short.